What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. On this channel, we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals, going over S&P 500 and the Nasdaq 100, but also breaking it down from a technical standpoint for stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And what do you know, guys? The markets did it once again. And even though yesterday we were already in an overbought condition, at least when it comes to the S&P 500 and the Nasdaq 100, but the markets went up today regardless of that, guys. So Russell 2000 went up 0.36%, Nasdaq went up 0.71%, Dow Jones went up 0.56%, and the S&P 500 went up 0.74%. So needless to say, guys, we are due for a pullback, no doubt about it, and it should happen anytime soon. But we are going to go over the S&P 500 and the Nasdaq 100 in just a second. When it comes to the sectors that trade inside the S&P 500, the best performing sector was healthcare, followed by utilities. So we can make the case that for the most part, the best two performing sectors today were defensive sectors, such as healthcare and utilities. And when it comes to the most important sectors inside the S&P, the financial sector had a good day. It went up 0.99%. The 10-year Treasury yield started to go up today once again. We can make the case, guys, that the markets are looking past the inflation fears and that maybe the 10-year Treasury yield is going up because of the fact that the economy is growing at a rapid pace. That's the case that a bull would make. The case that a bear would make is that inflation is getting out of control, and that the bond market is pretty much reflecting that situation because the 10-year Treasury yield is going up. That's what a bear would say. So the financial sector, as I just said, went up today almost 1%. It had a solid day, mostly because of the 10-year Treasury yield. And the tech sector also had a good day, guys. It went up almost 1% as well. So in general terms, we almost had a green day all across the board. 10 out of 11 sectors inside the S&P 500 closed today's trading session in positive territory. And before going over S&P 500 and the Nasdaq 100 and Netflix, you guys are going to get my live reaction when it comes to Netflix earnings report. I want to show you two trades that I closed in today's trading session, starting with Invite, guys. The trade that I broke down in yesterday's video ended up playing out perfectly well. So I told you in the video that we posted yesterday, watch out for Invite consolidating slightly above $27. So if you guys remember, I purchased 200 shares of Invite yesterday at $27.25, paying $5,450. And today, Invite got almost entered into overbought territory when it comes to the relative strength index of Invite. So I decided to play it safe, guys, because both the Nasdaq 100 and the S&P are very overextended. The 10-year Treasury yield was going up, and this is the stock of this company is a stock that trades on higher multiples. So I decided to close this trade, making $278. This was a basic, but remember that those are the ones that are going to put us in the Hall of Fame. And the other trade that I closed today was with CRISPR Therapeutics, but I don't remember. There you go. CRSP. Another trade that we broke down here on the channel, guys. So take a look. CRISPR was one of the stocks that we broke down from a technical standpoint last week. So on October 13, I purchased 50 shares at $96.81. And on October 15, I purchased 50 more shares at $96.92. And today I sold out of these 100 shares at $99.71. So I ended up making over here something like $300. Can I complain about this? Obviously, no, guys. I had a very solid day in which I made more than $500 closing these two trades that I just showed you. So now let's go ahead and take a look at the S&P 500. And the S&P went up today 0.74%, and it closed today's trading session at 4,519 points. And needless to say, guys, the S&P has gone too far, too fast. The relative strength index of the S&P is as of now at 76 points. So I'm thinking, guys, that the S&P needs to take a break. It should happen sooner rather than later. So I'm thinking, guys, that the S&P should either trade sideways for at least 1 or 2 or maybe 3 trading sessions, who knows, slightly above 4,500. 4,500 happens to be a former all-time high that also acted as overhead resistance back on August 25th. So I'm thinking that if maybe the S&P trades sideways, as I just said, for 2 or 3 trading sessions, that is going to let the relative strength index of the S&P cool off a bit, and maybe drop down to 60, 58 points. That would be healthy. Or maybe, guys, this is another scenario that we could see, and that is nothing to be worried about, would be the S&P breaking 4,500 to the downside and finding support at 4,474, which happens to be a former area of support that acted on 2 occasions back in mid-August. So if the S&P happens to drop down to 4,477, and if it trades, let's say, sideways slightly above 4,477 for at least 2 trading sessions, the relative strength index of the S&P is going to cool off. The S&P will still be trading above the moving averages, which is bullish in and of itself, and that is going to let the bulls of the S&P make another push higher without this index being in an overbacked condition. So we are going to see a pullback anytime soon, guys. So mark my words, and don't be afraid. I think that the bulls of the S&P are going to be pretty much in charge of this index as long as they remain trading above 4440, or at least they remain trading above this 180 SMA on the 4-hour chart. And when it comes to the NASDAQ 100, the NDX, this is another index that has gone too far too fast. Take a look at the relative strength index of the NDX, guys. 78 points, extremely elevated. So the NDX closed today's trading session at 15,400 points. So in the case of the NDX, I am going to make the same case that I just made in the case of the S&P 500. The NASDAQ 100 needs to take a break. So I'm thinking, guys, that the NDX should trade either sideways slightly above 15,380 points, and as I just said, in the case of the S&P, for 2 or 3 trading sessions in a row, that would be healthy. That would let the relative strength index of the NDX cool off a bit. Or maybe if 15,380 points happens to be broken to the downside, another possible area of support for the NDX would be 15,270 points, which happens to be a former area of support that acted as such on 2 occasions back in late August. So that would also be healthy, because that would let the relative strength index of the NDX go down a bit, and it is necessary as of now, 78 points. Wow, the relative strength index of the NDX. And as long as the bulls of the NASDAQ 100, guys, remain trading above this 180 SMA on the 4-hour chart at 15,150 points, they are going to be in total control of the NASDAQ 100. And now let's go ahead and take a look at Netflix, guys. And this is going to be live reaction. I haven't seen anything. So let the fun begins. Let's see what happened. Woo, take a look at this, guys. So Netflix is up a lot, guys, after hours. So Netflix went up today 0.16% and it closed today's trading session at $639. So it is up a lot after hours, guys. I'm assuming that they killed on earnings. I mean, it is not up that much. So it went up to $663 and then it retraced and it paid a visit to this 180 SMA on the 1-day, 1-minute chart. And as of now, it's trading pretty much at the same price that it closed today's trading session at, $640. So let's go ahead and take a look at the earnings. And the most important metric, guys, that the markets are going to be paying attention to is going to be the new subscribers. So let's see what happened over here. What happened in terms of EPS? What is that information at? Let me see. Okay, Netflix releases, third quarter is. Okay, so Netflix Q3 EPS came in at $3.19, beating this was a huge beat, guys, beating the estimate of $2.56, and sales came in at $7.48 billion, beating the estimate of $7.48 billion. So sales came in pretty much as expected, guys, $7.48 billion. So they pretty much beat on EPS, and sales came in as expected. And when it comes to new subscribers, so Q3 global streaming paid net additions came in at 4.38 million new subscribers, we can say, or new paid net additions, versus analyst consensus of 3.7 million. Wow, this was a huge beat as well, guys. So the analysts were expecting Netflix to add 3.7 million new paid net additions, and this metric came in at 4.38 million new paid net additions. So this was a huge beat, guys, when it comes to this concept, and they also beat on EPS. So the response of the markets isn't being that positive. So Netflix closed at $637, and as of now is trading at $641. It is up almost 1% after hours, but this was a very, very acceptable, to say the least, earnings report. So as of now, Netflix is trading at all-time high, guys. In technical terms, there's not much to say over here. What would be the next gap? If Netflix opens tomorrow's trading session at, let's say, $645, then maybe the next gap would be up to $660, which was the price, the area, the level in which the bulls were rejected after hours once this earnings report came out. So watch out for Netflix tomorrow, guys. I don't know if Netflix is going to keep on going up, because it is already trading at all-time high. But this was a very acceptable earnings report, to say the least. So who knows, guys, maybe Netflix can fill this gap up to $660. Or maybe if tomorrow we happen to see a sell-off that we never know, then I am going to be looking at $620, which has acted as support on several occasions during the last weeks. And now let's go ahead and take a look at Uber, which is going to be, let's say, the second stock of this video, guys, for the most part. And in the case of Uber, the stock of this company went down today, pretty much broke even. It went down 0.04%, and it closed today's trading session at $47.05. And guys, I really like the technical setup that I am seeing over here on the 4-hour chart. So take a look at how Uber is respecting, or has been respecting lately, this uptrending channel that you guys can see over here on the 4-hour chart. So as of now, Uber is holding as support the 50 SMA on the 4-hour chart, and at the same time is holding the lower line of this uptrending channel. So I'm thinking, guys, that if Uber keeps on consolidating slightly above $47, which is a price, which is an area that coincides with both the 50 SMA on the 4-hour chart and the lower line of this uptrending channel, that would be a sign that the bulls of Uber are gathering momentum in order to make a push higher and maybe pay a visit to the upper line of this uptrending channel that coincides on the 4-hour chart with a former area of resistance in which the bulls of Uber already failed on 3 occasions at $51.69. So $51.69 is an area of resistance in which the bulls of Uber failed back in early July, also back in early June, and lastly back in late May. So if the bulls of Uber were able to make this push to the upside from $47 up to, let's say, $41-ish or $51 or $52-ish, guys, we are looking at a trade that would leave a 10% profit. So don't sleep on Uber, guys. Take a look at the relative strength index of the stock of this company. It is at 44 points, very healthy from a technical standpoint. So, and remember what I told you yesterday in the case of Envite, watch out for Envite. Another stock that went on a tear today, guys, and that I called out in yesterday's video was Zillow. If you guys remember, I told you, watch out for Zillow, consolidating slightly above $85, and Zillow went on an absolute tear today from $85. So watch out for Uber, consolidating slightly above $47 and potentially filling this next gap up to $52 per share. And now let's go ahead and take a look, guys, at Bito, ticker symbol BITO, which is pretty much the first Bitcoin ETF that we have here in the US. And you guys know that I am a Bitcoin bull. So the fact that this ETF was approved is a step in the right direction, no doubt about it, when it comes to Bitcoin. So this is, for the most part, an institutional recognition that BTC and crypto, for the most part, are here to stay. In my opinion, I would rather buy Bitcoin directly instead of buying BTO. But I know we have to recognize, guys, that there are a lot of institutional investors out there that are not ready yet in order to invest directly in Bitcoin. So, and as I just said, this is a step in the right direction. There are some aspects of this ETF. I haven't read the prospectus yet. I still have to do it, but I have read something here and there. And first of all, this ETF doesn't hold BTC directly, so that's a downside of it. That is something that is something that I don't necessarily like about this ETF. And the money, guys, that is going to be poured into this ETF isn't going to be purchasing Bitcoin, guys. So 30% of the money of this ETF is going to be invested in bonds and commercial papers and stuff like that, and 70% of the money of this ETF is going to be deposited in a collateral account. So there are a lot of, let's say, negative aspects about this ETF, but in general terms, this is, as I just said, something positive for the crypto world in general terms. And I am not going to start any position when it comes to BTO. I might take a trade. Why not, guys? I mean, if I wanted, guys, to take a trade with any, let's say, Bitcoin related stock, I would be purchasing shares of Mira or Riot, which I think that are the better Bitcoin related plays in the stock market. I'm not going to hold BITO for a long time. And in technical terms, guys, we need to let this ETF to settle a bit more. Maybe we need to give BITO 2 or 3 weeks in order to be able to determine areas of support and resistance. In order to decide how we can take a trade on BITO. And this ETF pretty much didn't do much today. It traded within a narrow range between $42 and 40 cents. So maybe if any of you wants to start a position or a day trade or a swing trade, in the case of BITO, we could make the case, let me draw a line over here, that, okay, hold. So we can say that maybe $40.73 acted as lower support on 2 occasions today. Or maybe if this area of support happens to be broken tomorrow to the downside, then maybe $40 might be an interesting spot in order to pick up some shares of BITO. And it is still yet to be determined, guys, if or the way that this ETF is going to be affected by the volatility of Bitcoin. I want to see how that plays out, because in the case of Mira, guys, Mira is perfectly linked. Let's just put it that way to Bitcoin. Whenever Bitcoin goes up like crazy, Mira goes up like crazy. Whenever Bitcoin drops a lot, then Mira follows Bitcoin to the downside. So I think that Mira is the best Bitcoin stock market related play. Let's just put it that way. So I just wanted to tell you guys my opinion about BITO. And as I said, if any of you wants to maybe take a chance tomorrow on BITO, watch out for $40.73 or maybe $40, which was the low point in today's trading session. And now let's go ahead and take a look at the hottest stock of the stock market as of now by far, guys. Hands down, Affirm Holdings, the platform for digital and mobile payment. And guys, you know that I am a support buyer. I rarely ever take a momentum trade, buying a stock, breaking to the upside, breaking out to the upside. That's not my style. I do it here and there, but I am more of a support buyer. Let's just put it that way. However, today I couldn't help myself, guys. So let me show you the position that I opened today. And mind you, someone in yesterday's trading session invested $2 million, guys, in call options of Affirm, and it doesn't pop up, guys. So I purchased. I have been having issues with Robinhood when it comes to Affirm, guys. Sorry about that. So I purchased 20 shares at an average cost of $154. And as I was telling you, so someone invested yesterday $2 million in call options of Affirm that expire next Friday with a strike price of $170. So someone took a huge gamble on the stock of this company, believing and convinced that Affirm is going to pop higher up to $170. So Affirm went down today a bit. It went down 1.21%, and it closed today's trading session at $155.31. So I am going to zoom in here on the 4-hour chart, and guys, this chart looks unbelievably bullish, a clear uptrend. And take a look, guys, at how Affirm has been going up in a steady and consistent way. A very, but very solid uptrend. And as of now, take a look at this. This is a fact that is worth pointing out. Affirm is trading way above its moving averages, this 50 SMA and this 180 SMA on the 4-hour chart. And despite the fact of the stock of this company being a bit far away from its moving averages, the relative strength index of the stock of this company is at 65 points, guys. So this let us believe that if the bulls of Affirm happen to be able to consolidate slightly above $153, then they might gather momentum in order to make another push higher and maybe reach the $170, which is the strike price of the bunch of call options that were purchased in yesterday's trading session. So my plan, if I happen obviously to be able to take this trade the way that I am describing it, because as I just said, guys, I own 20 shares at $154. So if Affirm fills this gap up to $170, which is going to be a new all-time high for the stock of this company, I am looking at a 10% profit trade, guys. So watch out for Affirm, guys. I think that there's nothing else to say. Let me zoom out over here. This is a beautiful uptrend. I mean, this is an unbelievably beautiful looking chart, guys. Amazing, for real. So I think that if tomorrow Affirm happens to consolidate a bit more above $153, I might end up adding more shares to the position that I just told you about, guys. I might buy 10 or 20 more shares in order to ride them up to $170. So Affirm looks, oh, guys, this is This is such a good looking chart. I love it. Even though I am not a momentum trader, guys, but this chart looks simply unbelievable. And the last stock of this video, guys, is going to be a Smile Direct Club. And this must be one of the stocks of the stock market that has the greatest amount of back holders out there, myself included. So let me show you the position, and if it happened to pop up, guys. So this is a Smile Direct Club. You guys know that I am 100% transparent over here. Hey, take a look. Okay, this is so Smile Direct Club went up today 6.77%, and it closed today's trading session at $5.95. So take a look here, guys. I own 250 shares at an average price of $7, and as of now I am holding the bag with a loss of $260, but I am not worried at all about this loss. So I'm thinking, guys, that the fact that the bulls of Smile Direct Club are holding this 50 SMA on the 4-hour chart at $6, which happens to be a former area of overhead resistance in which STC felt back on September 3rd and also back on August 30th. So I'm thinking, guys, and taking into account that the relative strength index of a Smile Direct Club is at 56 points, very healthy from a technical standpoint. So if tomorrow and on the bulls of a Smile Direct Club start to gather momentum slightly above this 50 SMA on the 4-hour chart, let's say somewhere between $6.10 and $6.15, they might be gathering momentum in order to make a push higher and try to fill the next two gaps for Smile Direct Club. The first one up to $7.30, which happens to be a former area of resistance in which the stock of this company felt back in early August, but we are also talking about a former area of support back from early July and also back from early May. And the second gap, the other gap, would be up to $8.34, which happens to be a former area of support back from early July and also back from early June, but we are also talking about a former area of resistance in which the bulls of a Smile Direct Club failed on 3 occasions throughout May. So, and what's my average price on this position? $7, right? So I am pretty much at the first resistance that I just told you guys about. But for those who might be interested in taking a trade on a Smile Direct Club, watch out for a push from $6 up to the first gap at $7.30, in which case we are looking at a profit of 19%, and if the second gap happens to be filled up to $8.39, we are looking at a 36% profit. Jeez. By the way, I haven't taken a look at the short interest of a Smile Direct Club. Is it high? Is it low? If any of you happens to know about it, please drop a comment down below and let me know. So in my case, and since I am at $7, correct? Yeah, $7 exactly, $6.99. So I am over here, and if I happen to close my trade from at let's say $8.30 from $7, I might be obtaining a profit of almost 15%, nothing to sneeze at. So watch out for Smile Direct Club, guys, because it looks, or I believe, guys, I'm thinking that if the bulls happen to gather momentum slightly above $6, the stock of this company might be off to the races. And with a Smile Direct Club, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.